If you own ABSA Kenya shares, ABSA South Africa wants to buy the remaining shares that it doesn't own. What does that mean for you as an investor? This video, people have come to my inbox and told me to talk about it. Let me just break it down for you what this means. South African ABSA Group is spending around Kenya shilling 30.9 billion to increase its stake in ABSA Kenya. That's increasing its total holding from 68.5% to 85%. While this is not a complete buyout, it tightens the South African control over its highly profitable Kenyan bank. So how are they going to do it? They are buying out the minority shareholders by offering them full cash payout, especially if you own 10,000 shares or less. This means that you are going to be bought out if you accept the offer. And the offer is running from June 30th to August 11 at a price of 34.50. If you check the price today of ABSA, it's trading at that 3.30, that 3.35. So if you are to buy and benefit from this order, that is just one bob. You're just going to get a one bob from this offer. So what are the advantages and disadvantages of this offer? One of the advantages, these are good news for small investors, especially if you bought ABSA before this. Maybe you bought it at 15, 12, 20. You can benefit from this price of 34.50. That is good capital gains. And if you have shares of 10,000 or less, it's a premium price. But if you compare with today's price, it's not that premium. But if you bought it long time ago, that is a premium price. Then the other advantage, there is corporate stability, because ABSA will take a larger share of the profits, and thus they will be highly motivated to invest more heavily in the Kenyan market. And this could mean that the company will be more stable in the future. And that does not mean that ABSA, from this takeover, because it's from 68 to 85%, it doesn't mean that ABSA Bank Kenya is leaving Kenya. No, it will still continue trading on Nairobi Security Exchange, but as its own equity. What are the disadvantages? Of course, there will be less local ownership, because the parent company, which is in South Africa, is taking more control, and that means there will be fewer shares that will be available in the open market for everyday Kenyans to invest. Then, of course, there is the loss of local feel, where as ownership centralizes in South Africa, some Kenyan may feel that the banks become more of a multinational corporate company rather than a localized company. So what do you need to know? The tender, as I said, it was starting on 30th June, ending on August 11th. The price is 34 bob per share. If you have 10,000 shares or less, you are guaranteed a full cash payout. But for larger shareholders who own more than 10,000 shares, your first 10,000 shares are guaranteed. Then finally, should you sell or hold, especially if you own these ABSA shares? I cannot give you the financial advice, but what I can tell you, it will depend with your financial goal. You might accept the offer if you want a quick, guaranteed profits or capital gains, especially if you bought it below 30, but not at this time. Or you are a small-scale investor and you hold 10,000 shares or fewer, and you are guaranteed that you are going to get that 345,000 in your pocket. And maybe you have other investment plans, so you liquidate this one and use this money maybe for other better investment plans. But you can reject. In fact, if I was the one, I would reject the offer. Why? Because I'm a lover of regular dividend income. So ABSA Kenya has been paying dividends consistently. If you check for the last 5 years, in fact this year they paid a dividend of 2.05, but if you check, there is growth. Back in 2021 the dividend was 1.10. Over the years they continue increasing the dividend because of greater profitability. So if you take this offer, you'll forfeit the dividend income. The other reason why you should reject is if you believe in the long-term growth of this company, that is ABSA. Because the South African parent company isn't buying shares to lose the money. No, they are doing it because ABSA Kenya is highly profitable and they want a larger share of the profits. So by holding these shares, you continue to ride on the bank future growth. Then the last one, remember the bank is not being delisted in Nairobi Security Exchange. It will still continue trading as ABSA Kenya, meaning you can still sell your shares later, even 5 years from now or 10 years from now, when you can even get a better price than the 34.50. So if you need liquid cash today, you can take the offer. But if you look about long term, the passive income, long term building wealth, you can reject the offer. Thank you.